Welcome back to Squawk Box. Rick Santelli here, live on the CME floor with breaking news. Our September read on the trade balance, which I'm sure will be a trade deficit, expected $52 billion plus. That's what we received. $52.5 billion does have a minus sign. It is red. It is a deficit, but it is the smallest deficit going back to April when we were a whisker under $52 billion. Of course, trade deficits have taken on outsized meaning during all the trade negotiations. The Chinese currency has been doing better of late. That seems to be a sign that things may be progressing. Interest rates are back above 180 in tens. 184 close has been the cycle high. We will continue to monitor if interest rates and stocks will continue to go up hand in hand. Becky, back to you.
All right, Rick, thank you. Stick around for a minute. Steve Liesman's here, and he's got more reaction on these numbers, too. What do you think, Steve?
Reading trade data on the fly is the hardest thing I do if you really want to know. It's,
so do it faster.
It's totally insane. Do it faster. Look, it's in line. In general, we look for this thing to reflect what's been going on with the trade war. What's interesting is you have the trade balance getting worse, which I can't tell on the fly here, but one of the things we've talked about is it's stuff that may not be coming from China, could be coming from elsewhere, and it hasn't improved the trade balance. That said, I don't think improving the trade balance is something that matters. I think it's what you call a red herring, a white elephant. What's the right word for that? The right phrase for that? That doesn't matter. It sounds like the president has described this.
Almost be a misleading thing, so it's probably more of a red herring.
Right. So the president has described this as stealing. It's not stealing. They may be stealing intellectual property.
Yeah.
But the balance of trade is not necessarily a sign of that. Let me just take a look here. Exports are down, and that's a big issue. Services are about the same. And that's another thing that the president doesn't really talk about, which is the services thing has kept up. It's the goods one that's been down.
What about Boeing?
Imports, that's also going to be a factor in there. Let's see if I can get to the transportation thing. I really hate
Let me just ask Rick a question while you're digging through that number. Hey, Rick, again, this is a number that's so hard to read anything into, not only because of the trade war, but because of Boeing and what's been happening with that along the way, too. What sort of, it's heightened interest on this number, but what faith does the trading community put in it at this point?
They still go it pretty simple and straight. It's smaller, it's better. If it's bigger, it's not. All the rest of it really has too many political sidebars for traders. The closer it gets to minus 50, the happier they are. We haven't had a 40 handle in front of that since when? I have to go back all the way to last summer, June of 18, when it was minus 47. Yeah, traders like to keep it simple. Listen, it could be a red herring, it could be a political red herring, but at the end of the day, we're coming towards the final chapters of trade. So let's move on and see what phase one brings, because one thing I can tell you traders are paying close attention to: rising rates and record equity prices.
Having said all that, Steve, what is the Boeing input on this?
It's interesting. Boeing is up month to month, but it's substantially down year to date compared to last year's $41 billion versus $33 billion. That's down a lot. Other things that are down year to date comparatively: agriculture's down, manufacturing exports are down, advanced every aspect is down. Rick is right, and hopefully we're over the hill on that, but there may be some residual to pay on this. One of the things that I looked at was the year-over-year change in exports and their contribution to GDP. Exports have continuously added to GDP. Over the past year or so, they have had this steady decline, which means, as Rick suggests, there is upside if we can solve this trade issue and get back to where we were.
Hey, Rick, you alluded to this, but what traders want to see is getting some sort of phase one agreement that's put in place. That's why yesterday you saw the futures picking up, or you saw futures picking up as it looked like, okay, even if we undo some of those tariffs that had been put on in September, the good news is that means we're more likely to get some sort of at least détente.
Yeah, I'll tell you what, we all have our opinions of this administration, but one thing that I think is hard to dispute, they understand the word compromise. This president and his men out in the field and women out in the field that are trying to put this whole deal together do understand compromise may be coming, and I do think that some of these little parachuted kind of floating ideas that we're going to ultimately see that will chew back some of the tariffs in lieu of maybe a bigger set of phase one issues seems to be what everybody is focused on. And I would also point out that globally, interest rates have started to move up. Once again, negative securities with regard to what proportion they play in the global scheme of things continues to move down a bit. And I want listeners and viewers to look at it from this perspective. When that exodus of what was deemed the biggest bubble ever, every institution and every bank and every investor of large size seems to be holding, for example, sovereign debt, is that reverses, where's all that money going to go? I personally think it's going to go into what in many parts of the globe is underweight in global stock, not necessarily the U.S., but all boats will float on that global inflow that could be at the other end of this interest rate trade.